Hi there. Welcome to our channel. Today, we are talking about the difference between investing in France's real estate market through a SAS company and through a crowdfunding plan. Let's start with the SPV SAS investment. The SAS, or Société par Actions Simplifiée, is a limited liability company in France. One of the advantages of the SAS is that you can invest as much money as you want in the company's shares. However, in order to create an SAS, you must comply with certain legal and regulatory requirements. If you are not familiar with business creation in France, it can be a difficult and costly process. Nevertheless, you can invest in an SPV SAS by buying shares in it. Many companies are starting up in this sector, and this also allows small investors to generate money for themselves and a substantial asset base at a lower cost, with much less risk than through crowdfunding, which is only composed of commercial contracts, whereas a property acquired through an SPV SAS remains the property of the shareholders, making it a much safer investment. Let's move on to participatory financing or crowdfunding. In France, crowdfunding platforms are regulated by the Autorité des Marchés Financiers, AMF. One of the advantages of crowdfunding is that you can invest small amounts, sometimes as little as 10 euros. However, there are limitations to the amount you can invest in a single crowdfunding campaign. In France, you cannot invest more than 2,000 euros in a single crowdfunding investment plan. Indeed, crowdfunding, being regulated to protect the investor, does not offer the possibility to invest in a perennial and serene way, because the investor does not hold himself the real estate in which he invested, but only holds a commercial contract. If we add to this the fact of having to spend a lot of time on each proposed file, while not knowing in advance if it will be possible to invest in it, this maximum amount of 2,000 euros per project is in fact an extremely time-consuming investment and offers little visibility over time. It is important for you to understand the differences between these two options before making a decision. If you have a lot of money to invest and are willing to meet the legal and regulatory requirements to create an SAS, this may be the best option for you, as well as the opportunity to join investor clubs and circles to acquire SPVs in common and allow you to consider creating your own real estate portfolio very quickly. However, if you are looking to invest small amounts, crowdfunding may be a more accessible option. It is also important to consider the additional costs associated with investing in real estate in France, such as real estate agency fees and legal fees for drafting the sale agreement. You can find more information about these costs on the Russell Bedford and CMS Law website. You can find the links in the description of the video. We will do a more detailed video on the subject of legal fees and implications after this one. Finally, it should be noted that it is not necessary to declare your investment in a real estate company to the French Ministry of Economy and Finance. This means that you can invest in a real estate company without having to fill out any administrative forms, so you can buy shares in an SPV SAS very quickly to start generating your real estate portfolio. In summary, setting up an SAS can be a good option if you have a lot of money to invest and are willing to comply with the legal and regulatory requirements of the official authorities. Participatory financing may be a more accessible option if you want to invest small amounts. After this comparison, the best option when you do not have enough capital to acquire a property directly is to invest through an SPV SAS, which allows you to acquire a fraction of a property, avoiding the need for borrowing and increasing your rental returns. Don't forget to take into account the additional costs associated with real estate investment in France. I hope this video was helpful in your decision-making, and don't forget to do your own research before investing in a real estate company or in crowdfunding. See you in the next video.